There's a pattern in history that repeats every time a currency collapses. And it's happened more times than most people realize, not just in distant history. In the last 100 years alone, over 50 currencies have completely failed. Hyperinflation, devaluation, replacement, gone. Weimar Germany, 1923. The mark became worthless. People burned cash for heat because it was cheaper than buying firewood. A loaf of bread cost billions of marks. Life savings evaporated overnight. Zimbabwe, 2008. The Zimbabwe dollar collapsed so completely they started printing $100 trillion notes. It wasn't enough to buy a loaf of bread. The currency became a joke, a historical curiosity sold to tourists. Venezuela, 2016 to present. The bolivar lost 99.9% of its value. People are starving in a country with the world's largest oil reserves because the currency died. Argentina has had 5 currency collapses in the last century. 5. The peso has been replaced, redenominated, and devalued so many times that Argentinians don't trust their own currency anymore. And here's what nobody tells you about these collapses. The people who lost everything weren't stupid. They weren't reckless. They were ordinary people who trusted the system, who kept their savings in banks, who believed their government when they said everything was fine. They lost everything because they held the wrong assets: cash, bonds, savings accounts, anything denominated in the currency that was collapsing. But in every single collapse, there were people who didn't just survive. They thrived. They preserved their wealth. They came out the other side richer than before. Not because they were lucky, because they held the right assets. The 3 assets that survive every currency collapse. Every time, without exception. And right now, in 2025, with the US dollar showing every warning sign that preceded previous currency crises, with $36 trillion in debt, with money printing accelerating, with inflation still elevated, you need to know what those 3 assets are. Because the pattern says another currency crisis is coming. Maybe not tomorrow, maybe not this year, but it's coming. And when it does, the people holding the wrong assets will be destroyed. The people holding the right assets will be fine. This is the story of the 3 assets that survive, how they've worked in every previous collapse, and why you need to own them before the next crisis hits. Before we get into the 3 assets, you need to understand what a currency collapse actually looks like, because it's not what most people think. A currency collapse doesn't mean the currency disappears overnight. It means it loses purchasing power so rapidly that it becomes effectively worthless for storing value or conducting normal commerce. In Weimar Germany, the mark didn't disappear. You could still use it. But what cost 1 mark in 1918 cost 1 trillion marks in 1923. The currency still existed. It just couldn't hold value. In Zimbabwe, the dollar didn't vanish. The government kept printing it. But by 2008, inflation was running at 89.76% annually. The currency was technically still there. It just couldn't buy anything. This is what currency collapse means. Not that the money disappears, that it becomes worthless, that the number in your bank account stays the same, but what it can buy evaporates. And here's the critical point. Currency collapses don't happen because of external shocks. They happen because governments print too much money, every single time. Weimar Germany printed money to pay war reparations and fund government spending. Zimbabwe printed money to fund government operations after the economy collapsed. Venezuela printed money to cover budget deficits when oil revenues fell. The mechanism is always the same. The government spends more than it collects in taxes. It can't borrow enough to cover the gap. So it prints money, and the more it prints, the less each unit is worth. And the less each unit is worth, the more it has to print to buy the same things. It's a death spiral. And once it starts, it's almost impossible to stop, because stopping requires the government to cut spending or raise taxes. And that's politically impossible, so they keep printing until the currency dies. Now, the US isn't in hyperinflation. Not yet. But the warning signs are there. $36 trillion in debt. $2 trillion annual deficits. The Fed printed $5 trillion from 2020 to 2022. Inflation spiked to 9% in 2022. The trajectory is clear. The US is following the same path every other currency followed before it collapsed. Not as far along, but on the same path. And when the collapse comes, and history says it will, the assets you hold will determine whether you survive or get destroyed. So what are the three assets that survive every currency collapse? Let's go through them one by one. The first asset is gold. And this isn't speculation. This is historical fact documented across every currency collapse in the last 2,000 years. Gold survives currency collapse because it's not a currency. It's money. Real money. Money that can't be printed. Money that can't be devalued by government decree. Money that holds value regardless of what happens to paper currencies. In Weimar Germany, if you held gold in 1918, you preserved your wealth. While the mark lost 99.9999% of its value, gold held steady. In fact, gold priced in marks went from 100 marks per ounce in 1918 to 87 trillion marks per ounce in 1923. If you had 100 ounces of gold in 1918, you could buy a nice house. If you held those 100 ounces through the hyperinflation, you could still buy a nice house in 1923. The gold didn't change. The currency collapsed around it. In Zimbabwe, gold was one of the few assets that held value. People who had gold could trade it for food, for goods, for foreign currency. People who had Zimbabwe dollars starved. In Venezuela, gold became an alternative currency. People melted down jewelry to buy food. Miners smuggled gold out of the country to trade for dollars. Gold was worth more than the official currency. This pattern repeats in every collapse. Gold holds value. Paper currency doesn't. But here's what most people don't understand about gold. It's not an investment. It's insurance. You don't buy gold expecting it to make you rich. You buy gold expecting it to preserve your wealth when everything else fails. Gold doesn't produce income. It doesn't pay dividends. It doesn't grow. It just sits there. And that's the point. When currencies are collapsing, when stocks are crashing, when bonds are defaulting, gold just sits there holding value. In normal times, gold underperforms. Stocks go up faster. Real estate appreciates more. Even bonds provide income. Gold does nothing. But in crisis times, gold is the only thing that survives. And that's why you own it. Not for the good times, for the bad times. Right now, in 2025, gold is trading around $2,700 per ounce. That's near all-time highs, and people say it's too expensive, that you've missed the move. But look at it from a currency collapse perspective. If the dollar loses 50% of its value over the next decade, gold priced in dollars will double. If the dollar loses 90% of its value, gold will 10 times. Gold isn't expensive. The dollar is overvalued, and when the market realizes that, gold will reprice violently higher. The second asset that survives every currency collapse is productive land. Not just any real estate. Productive land. Land that produces food, resources, or income. In Weimar Germany, farmers who owned land survived. They could grow food. They could trade food for other goods. They had something of real value that people needed, regardless of what the currency was doing. Urban property owners struggled, because property values are denominated in currency, and when the currency collapses, property values collapse too, unless the property produces income or resources. But farmland, timberland, land with water rights, land with mineral resources, that land held value because it produced real things, food, timber, water, commodities that people needed. In Zimbabwe, land ownership became the most valuable asset. People who owned farms could feed themselves and trade surplus for other goods. People who owned urban apartments had assets denominated in a worthless currency. In Venezuela, rural land with water and the ability to grow food became priceless. Urban real estate became nearly worthless because it was priced in bolivars, and nobody wanted bolivars. The pattern is clear. Productive land survives because it produces real value independent of currency. It's not a paper asset, it's a physical asset that generates tangible output. But here's the key distinction. Not all real estate survives currency collapse. Speculative real estate, vacation homes, urban condos, these are priced in currency. When the currency collapses, their value collapses too. Productive land is different. A farm that produces 10,000 bushels of wheat doesn't stop producing wheat because the currency collapsed. The wheat still has value. People still need to eat. The land still produces. This is why productive land survives. It's not dependent on currency. It's dependent on its ability to produce real goods that people need. Now, most people can't afford to buy a farm, but you can own farmland through REITs, through crowdfunding platforms, through partnerships. The key is owning land that produces income or resources, not land that's purely speculative. Right now, farmland prices are elevated, but they're elevated in dollar terms. If the dollar loses value, farmland priced in dollars will rise, because the land's productive capacity doesn't change. Only the currency it's priced in changes. The third asset that survives every currency collapse is hard assets that hold utility value. Tools, equipment, commodities, physical goods that people need and that can't be printed or devalued. In Weimar Germany, people who owned tools, machinery, or stockpiles of commodities could trade them for food and other necessities. A carpenter with tools could work and earn real value. A factory owner with machinery could produce goods and trade them. But people who held cash or bonds had nothing. The paper was worthless. In Zimbabwe, people hoarded fuel, food, medicine, anything physical that held utility value, because those things could be traded. The currency couldn't. In Venezuela, people who had generators, water filters, medical supplies, they could trade those for food or other necessities. People who had savings accounts had nothing. This is the third category, physical assets that hold utility value independent of currency. This includes commodities, oil, copper, steel, wheat. These are physical goods that people need. When currency collapses, commodities repriced in the new currency or in foreign currency, but they don't lose their utility value. It includes tools and equipment. A truck doesn't become worthless because the currency collapsed. It still hauls goods. A generator still produces electricity. A water filter still purifies water. It includes stockpiles of necessities, food, medicine, fuel. These things hold value because people need them to survive. Now, I'm not saying you should become a prepper and stockpile 10 years of food, but understanding that physical assets with utility value survive currency collapse is important. If you own a business with physical equipment, that equipment holds value. If you own commodities or commodity-producing assets, those hold value. If you own tools or machinery that produce income, those hold value. The key is that these assets aren't denominated in currency. They're physical. They have utility, and utility survives currency collapse. If you're starting to realize that the assets you hold right now might not survive the next currency crisis, that cash and bonds and even stocks denominated in a collapsing currency will lose value, then you need to understand how to rebalance your portfolio before it's too late. Subscribe to Economy Time Machine right now, because in the next few videos I'm going to show you exactly how to allocate between these three asset classes and what percentage of your wealth should be in each. Hit that subscribe button. Now let's talk about what doesn't survive currency collapse. Because understanding what fails is just as important as understanding what survives. Cash fails. Obviously, cash is the currency. When the currency collapses, cash becomes worthless. This is the most direct loss. If you hold $100,000 in cash and the currency loses 90% of its value, you have $10,000 of purchasing power left. Bonds fail. Government bonds are promises to pay you back in currency. When the currency collapses, those promises become worthless. You get paid back in full, but the currency you're paid in is worthless. In Weimar Germany, people who held German government bonds lost everything. The bonds were repaid in marks, worthless marks. In Zimbabwe, government bonds became toilet paper, literally. People used them as toilet paper because that was more valuable than their face value. Bonds denominated in a collapsing currency are a guaranteed loss. You're lending money to the entity that's destroying the currency, and they're promising to pay you back in that same currency. It's financial suicide. Stocks are more complicated. Stocks represent ownership in companies, and companies own real assets, factories, equipment, inventory. Intellectual property. In theory, stocks should hold value during currency collapse because the underlying assets hold value. But in practice, stocks often collapse too, because stock prices are denominated in currency. And when the currency is collapsing, stock markets panic, investors sell, prices crash. Eventually, stocks repriced in the new currency or in foreign currency. But during the collapse, stock prices can fall 70, 80, 90% in real terms. In Weimar Germany, stocks initially rose in mark terms, but they fell in real terms. If you owned stocks, you were better off than holding cash, but you still lost significant purchasing power. In Zimbabwe, the stock market became meaningless. Prices were quoted in Zimbabwe dollars, but nobody used Zimbabwe dollars. The market effectively shut down. Stocks can survive if the company owns real assets and generates real revenue. But during the collapse, stock prices are volatile and unreliable. The safest approach is to own stocks in companies that own hard assets. Mining companies, energy companies, agricultural companies, companies that produce real goods that hold value regardless of currency. But speculative tech stocks, financial stocks, anything that's purely dependent on currency-denominated cash flows, those are at risk. Pensions and annuities fail. These are promises to pay you a fixed amount of currency in the future. When the currency collapses, those promises become worthless. In Weimar Germany, retirees who depended on pensions starved. The pensions were paid, but the marks they were paid in couldn't buy food. In Argentina, pensions have been destroyed multiple times. People who worked their entire lives and saved in peso-denominated pensions lost everything when the peso collapsed. This is one of the cruelest aspects of currency collapse. It destroys the savings of people who did everything right, who worked hard, who saved, who trusted the system. And it rewards people who held hard assets, who didn't trust the system, who positioned themselves for collapse. Now let's talk about how to actually implement this, because understanding the theory is one thing, positioning your wealth is another. The allocation depends on your situation, your age, your income, your risk tolerance. But here's a general framework. If you're young, with decades until retirement, you can afford to hold more stocks and less gold, because you have time to recover from volatility, and stocks will eventually reprice after a currency collapse. But you should still own some gold. 5 to 10% of your portfolio, as insurance, as a hedge against the currency risk you're taking by holding stocks and earning income in dollars. If you're middle-aged, approaching retirement, you should increase your allocation to hard assets, 10 to 20% in gold, some exposure to productive land or commodity-producing assets, less exposure to pure currency-denominated assets like bonds. If you're retired, living off savings, you need significant protection, 20 to 30% in gold, exposure to productive land or income-generating hard assets, minimal exposure to bonds or cash beyond what you need for near-term expenses. The key is diversification across asset classes that aren't all denominated in the same currency. If everything you own is priced in dollars, you have 100% currency risk. If the dollar collapses, you lose everything. But if you own gold, productive land, and hard assets alongside dollar-denominated assets, you have protection. Some of your wealth will survive regardless of what happens to the dollar. Now here's the uncomfortable truth. Most people won't do this. Most people will keep 100% of their wealth in dollar-denominated assets, cash, bonds, stocks, pensions. And when the currency crisis comes, they'll lose most of their wealth. Not because they were stupid, because they trusted the system. Because they believed the government when they said everything was fine. The people who survive will be the ones who didn't trust the system, who studied history, who understood that currency collapse is a pattern that repeats, and who positioned themselves accordingly. Gold, productive land, hard assets with utility value. These are the three assets that survive every currency collapse, every time, without exception. The US dollar isn't collapsing today, but the trajectory is clear. $36 trillion in debt, $2 trillion deficits, money printing, inflation. Every warning sign that preceded previous collapses is present. Maybe the collapse happens in 5 years, maybe 10, maybe 20. But the pattern says it's coming. And when it does, the assets you hold will determine whether you survive or get destroyed. The question isn't whether you believe the dollar will collapse. The question is whether you're willing to bet 100% of your wealth that it won't. Because that's what you're doing if you hold only dollar-denominated assets. You're making a 100% bet that the dollar will remain stable, that the government will stop printing money, that the debt will be managed, that inflation will stay low. History says that's a bad bet. History says currencies collapse, and the people who survive are the ones who own the three assets that hold value regardless of what happens to paper money. The pattern is clear. Gold, productive land, and hard assets with utility value survive every currency collapse. Cash, bonds, and currency-denominated assets get destroyed. Weimar Germany, Zimbabwe, Venezuela, Argentina, every collapse follows the same pattern. And the US dollar is showing every warning sign that preceded those collapses. The question isn't whether you believe it will happen. The question is whether you're willing to risk everything by holding only dollar-denominated assets. If you want to understand exactly how to allocate your wealth across these three asset classes, what percentage should be in gold, how to access productive land without buying a farm, and which hard assets provide the best protection, then subscribe to Economy Time Machine right now. Because the currency crisis isn't hiding in some distant future. It's written in the pattern, and the pattern says it's coming. Subscribe now, and I'll show you exactly how to position yourself before it hits. I'll see you in the next one.